Today we're going to be talking about Coalition's new claims report. We're really excited that we just launched our first white paper, first of many to come. And this one is focused on the trends that we're seeing with respects to cyber insurance claims. And we all know that 2020 has been a very unique year in a lot of ways, with the onset of the COVID-19 pandemic and changes to working norms and all of these sorts of things. There's been a very material impact in terms of how all of us operate in our day-to-day lives and business. And there's been a really interesting impact in terms of the cyber claims that we see as well. And so we're excited to dive in to some of the findings that we had in this first white paper and share some of the insights that we have about cyber claims and about how we handle those differently than the rest of the marketplace. My name is Jen McPhillips, and I'm going to be moderating the discussion this morning. And I'm really excited to be joined by my colleague, Catherine Lyle, who is the head of claims for Coalition. Catherine's a privacy attorney and previously was the head of global cyber claims at Swiss Re. And so she has, not only a great depth of experience in terms of cyber claims, but a really unique kind of perspective on the industry. So just a quick note before we dive into some of the content. I think we're all probably very used to using Zoom at this point in time, but you should see at the bottom of your screen a couple of different controls that will enable you to submit questions throughout the whole conversation. So there's a chat feature and there's a Q&A, and we would encourage you guys to submit questions throughout the presentation. We're going to have some time reserved at the end as well to go through Q&A, but we'll also answer questions that are kind of topical as we go. So just a first note about who we are before we get started. We're really excited to be joined by a broad group of our broker partners in the US and Canada today. So thank you again for taking time out of your busy week to join us. Coalition is the fastest growing provider of cyber insurance in the US and now in Canada. And we're a bit different than other cyber insurers out there because not only do we have a broad form and unique policy language, but we also provide all of our policyholders with proactive cybersecurity tools and services to help them manage cyber risk. And you're going to see in some of the stats that we're going to share about our claims data that this has a really interesting and material impact in terms of the severity and the frequency of the claims that we handle. So today we're going to be talking about this first half of 2020 claims report that I mentioned. We're going to go through a few different topics. So first, we're going to share kind of high-level cyber claims by the numbers. What are we seeing in terms of frequency, severity, and how is that shaped out in the first half of the year? Then we're going to talk about cyber claims specifically for 3 types of incidents: ransomware, funds transfer fraud, and business email compromise. And these are the most common incidents that we see kind of across our portfolio and then in the marketplace more generally. So we're excited to share some more specific trends across these 3. Then we're going to be talking about some of the specific recommendations that we have for our insureds, but also for you as brokers for how to solve cyber risk. These are largely things that are free or low cost to implement and that would prevent, the vast majority of the claims that we see that we're going to talk about today. And then finally, we're going to have some time for open Q&A. So with that, I'm excited to hand it over to my colleague, Catherine. Catherine, I think you might be muted if you just hopped on.
Can you hear me, Jen?
Yes, I can hear you now. Okay,
great. So thank you for the introduction, and thank you everyone for attending today. What I want to do is, work on this as we always are on cyber risk, and we work on it together. And having this discussion and having this share of information is vital to that, because it only can help if we know what we're seeing, so that we can know how to either prevent or make it so that our mutual clients are not the low-lying fruit, right? We want to make sure that they are the ones that are just a little bit higher on the tree, security-wise, human-wise, et cetera. So I want to just set the stage a little bit. Most of you have dealt with information that is out there in terms of where we get data, et cetera. Jen, can you move to the next slide for setting the stage? Thanks. So in the past, right, when we've talked about claims and claims at Coalition, we set the stage, and this webinar is going to be no different. So when we speak about claims today, we're mostly talking about claims experienced by Coalition insureds, and we want to acknowledge that some of the information that permits us to make comparisons also then comes from outside sources. So we're looking at market data, our own policyholders, as well as insurance applications. And we digest this information to better understand what's happening in the market and what's happening for our insureds. So during this webinar, you will note that many areas that our numbers are standouts from the market. That is due to our unique underwriting, risk engineering capabilities, as well as our claims handling. However, during the course of this discussion, we're also going to share information that has occurred due to COVID. We cannot ignore that because we've had this rapid change, and we've talked about this in other webinars, where we moved to accommodate 70% of our workforce to an online platform. And we did this in just a matter of weeks. This shift opened up ports, right? We'll call them essentially doors and windows, into computer systems that were not there before. And this opened the door for basically more cybercrime. So moving forward, let's talk about cyber claims by the numbers. What we need to look at is the market frequency and the number that, and this is the number that general insurance market is seeing for claims frequency for cyber alone, and the number of claims that are made by insureds around the globe. As you'll note, the market here is 4.75%, 2018, jumps to 6.2% in 2019. And 2020, right, yet to be determined, right? These are statistics that have a lag. This year-over-year increase is an increase about 32% in claims. And that's just from 2018 to 2019. And we anticipate quite a large jump from everything that we have been hearing in the market. But what you notice, and what is worth noticing, is that the Coalition policyholders reported 1.3% to 1.5% claim frequency, far lower than in the market. That translates to about quarter less frequency in claims. Again, this is no part, it's no small part to the differentiated process that we have both for underwriting and that ongoing risk management that we talk about so frequently. So now let's look at something that you probably hear a lot. We hear it a lot in claims. You know, I never thought that I'd be a target. I'm a small entity. But we can also look at severity. So we've talked about frequency. Now let's look at severity a little bit here. And we have two views here in which we examine basically companies and claims. And the first will be by revenue band on the left. In that revenue band, you can see that even the smallest companies are being hit by cyber events. And those events cost for those entities, right, around, we got 10 million below 10 million. I'm sorry, a million below a million, but these are 10 million in revenue. You can see then the larger entities, severity trends up very quickly, upwards to about $2 million of what we paid. These are Coalition statistics. And then when you add that yellow bar, you can see that increase in frequency, right? The increase in frequency and severity. So yes, larger entities have higher frequency and this larger severity. But what's important and what is relative here is, as a smaller company, asking that question of, can they survive $1 million loss? And I would hazard to guess that most small to medium are going to say, no, we cannot. And that's where insurance comes into play. But what we can focus on is a little bit better is the claims trends, right? So we've talked about the frequency and the severity. Let's dig a little bit deeper to talk about, of that frequency, of that severity, what are the claims that we're seeing? So moving forward with the claims trends, we can see that ransomware, FTF, and email compromise account for about 87% of reported claims. That's an enormous number. What it gives us is a little bit of advantage, right? Because we know in this market what is the biggest trend, what should we focus on? 41% of that, as you can see, is ransomware. Funds transfer, 27%, and then email compromise. The key about email compromise, and what we will talk about again, is that email compromise tends to lead to these funds transfer fraud and to the ransomware events. Looking a little bit at coverage, people will say, okay, ransomware, okay, so you pay out of cyber extortion. Absolutely. But you have to remember funds transfer, right? We pay out of the funds transfer kind of loss out of that cover. But you also then have to respond with breach response coverage, forensics, counsel, data mining, kicking out the bad actor, right? These are all the elements that come into play, multiple elements and multiple coverages to respond to a ransomware, to a funds transfer, or to just a basic email compromise. The reason, and I think what's important to focus on here, that takes us a little bit beyond the statistic, is that ransomware, funds transfer, and the email compromise that leads to these, the reason that these have such a huge part of the market, 87%, is because the old school way of doing this is that bad actors used to have to monetize the information they steal, right? So they would steal the information and then they would have to sell it on, you know, quote unquote, the black market. Now they've figured out how to instantly monetize their crime. They either extort the money through ransomware or flat out steal it through funds transfer fraud. So they're working a lot smarter and not harder. And that is what this was why it represents that ransomware and STF are now taking that largest chunk of these claims. But let's look at now attack vectors, right? This is so, okay, now we've talked about ransomware, funds transfer. How are they getting in? This is key, this is vital. This is vital for your clients, discussions with your clients. So the top cyber events, 54% of them start through email, either phishing, social engineering, right? Malware, where they clicked on something that they shouldn't have clicked on. And email is the first point of attack that threat actors make. Remote access, such as remote desktop protocol, is the second largest attack vector. It is the largest attack vector for ransomware. Well, these numbers are pretty straightforward. Let's think about them and their source or their cause more clearly. More clearly, the points of entry for threat actors, the most frequent entry point is connected to human error, this click culture that we're in. So to be clear, 60%, when we pull away from some of these numbers and add them a different way, 60% is human error. That's a staggering number. This includes stale passwords, phishing, social engineering. And then 40% can be seen as security protocols, weak security. Arguably, both of these are preventable. And this is something that I discuss at the end of the webinar. So let's dig a little bit deeper. Let's go into the first one of these, right? Of the 87%, let's talk about ransomware first. Ransomware, let's talk very clearly just so that we're level set. We all agree to what we're talking about. Ransomware is cyber extortion. Bad actor gains access to your client's computer system and encrypts the entire system, locks it up, and won't give you it back, won't give you the key until you pay. Flat out extortion. And as we've discussed before, this is the immediate monetization of a cyber event. Once you unlock, you pay through Bitcoin, you're free to go. And your clients, our insureds, we pay on their behalf. This is vital because ask one of your clients, would you be able to pay, when you look on the left-hand side, when we talk about Maze, Ryuk, NetWalker, would they be able to come up with $420,000 to pay, and would they know how to go through Bitcoin, right? Would they be able to do all of these things? If they're like, yeah, we can completely do that, I find that hard to believe. Because now we're looking at more towards, remember that $1 million of an entire event all included. Now, because of the monetization that we've seen, and it's proven very worthwhile for these bad actors, what they've done now is they've taken the old versions, right, as you see on this chart on the left-hand side, right? Dharma, Doppelpaymer. These were the older versions. They've jazzed them up, unfortunately, and now we have Maze and the sisters to Maze. And these are novel approaches to ransomware, so that's what we're seeing now. And these novel approaches, what they've done now is take proof of information and they keep it with them, and they hold it. And they'll say, hey, in addition to that, we note that when you opened up the ransomware note, you clicked on the time bomb, right? It's a click bomb kind of situation, and that's going to start our timer. And we give you 3 days to pay us. And if you don't pay us in 3 days, we're going to start releasing all of this private information. So everybody around the globe is going to know that you've had ransomware and that their information potentially exposed. So that is how these things have changed. And not only, I mean, think about it, if one of your clients has HIPAA information, OCR is going to come back later and say, wait a minute, could you have paid to get them to delete the information to make it more private? Now, I know the information is out there, and yes, you absolutely have to notify, but could you have done that? And so these are the things that we're seeing, and these bad actors have realized this. Now, what's further important about ransomware is that between Q1, Q2 of this year, which we believe is part of that COVID impact, we've seen a 47% increase in severity. So there has been a huge jump, 47% increase just in the demands, the severity demand from ransomware. The biggest savior, we're going to talk about this at the end, the biggest savior to any company is to have backups. We're going to talk about this at the end of the webinar of how to keep them, where to keep them, etc.
Catherine, we got a question.
I think question, yeah, go ahead.
We just got a question in on pay on behalf, and I'm wondering if you could clarify that. So the question is, are we paying the bad actor on the insured's behalf, or are we quickly reimbursing them after they distribute the funds back to the bad actor?
We are paying on their behalf. We don't think that it's fair that we ask an insured to pony up $420,000, $500,000, $1 million. So we pay on their behalf. We also do it through, we have negotiators. We handle the transfer of the money to Bitcoin. So this is a one-stop shop so that you're not hunting and trying to figure out how to do these things. That is our job. We see this all day long. That's what we do.
And one other thing, if I could just add, one other real benefit of the pay on behalf component of our policy is that with ransomware, as with a lot of other components of claims, speed is so critical. The faster that we can remediate the issue, that we can get the decryption key back, that we can get the insured back up and running, that means there's less business interruption for your client. And so part of the pay on behalf is exactly as Catherine said, that it's just a lot easier for us to manage and execute on our end than it would be for an insured to come up with several $100,000 or $1 million. But that speed also means that they're able to get back to business so much quicker than if they were responsible for distributing the funds.
So with that, let's move on to funds transfer fraud. And this is such a unique, just cyber kind of event in the sense that it's taking something that was old school, right? It used to be through a letter that you received in the mail of, hey, if you send me this, phone calls. Now it's done through the computer, and it's done through spoofing, right, or getting email access. So what the bad actor does, just so that we're level set, is they usually gain access to either our client's computer system so that they can figure out who they pay, when they're going to pay, or their vendor or customer and find out who they need to pay, et cetera. So they flip and they trick. And then it's usually a spoofed email. Now, the key here is that like ransomware, it's an immediate monetization, right? This is a crime that has immediate reward. And we see that in 2019, 2020, 39% increase in frequency. Because once there's that success and they see the ease to it and they don't have to sell anything further, they're going to keep in doing this. But unlike that of ransomware, there is a way to recover, right? And it can be immediate. And then this goes back to my initial statement to everyone of, hey, we have to work on this together. And so we encourage your clients, our insureds, to reach out to Coalition the moment they know that funds have been transferred to a bad actor. Because we can step in, and in 55% of the cases, we've recovered funds. And of those cases, we've recovered 85% of the funds. The fun fact that I like to share is actually reflective of 2020, and we've recovered 94% of the funds that were transferred to a bad actor by our insureds. We do this with banking relationships that we have. We have a structure and a procedure in place within Coalition on how to get the money back. And then we also have FBI contacts that we work with. So we're able to right the ship very fast with funds transfer fraud. But this is done through cooperation with the insured, with your clients. We're going to talk about this. Is going to be another thing that we hit on at the end of how to protect funds and how to avoid funds transfer fraud. And now finally, let's turn to business email compromise, right? This is kind of the ugly stepchild of all of it, because it's the place that most of the other ones start. So what we're looking at here and what's remarkable about it, and we've highlighted this before, is that 60% of all claims that have an initial point of entry is from business email compromise. That means that the attack vector, right, the entry point was email. And then when you layer that with COVID, we've seen a 67% increase in business email compromise. This is due, like we've talked about before, the fact that we moved from this brick and mortar to an off-site location. People are driven by this click culture, right? Click, help, this customer service. But also in the past, they may have popped their head up and said, hey, Susan, I got this thing. I clicked on it. What do you think? And that person would say, I'd call IT, right? And now they might say, oh, well, nothing happened. I'm just going to keep going, right? And they may not reach out to somebody and ask. And that's working to the favor of these bad actors. What's interesting behind this statistics that you see here is that we have found that of the organizations that use Microsoft Office 365, those entities are 3 times more likely to experience a business email compromise than any other service. The next question you're going to ask is, well, why Microsoft? And we're not saying that Microsoft has an inferior product, but what has happened is that when an entity starts using Microsoft in the product basically out of the box, it comes with 0 security measures. The user of the product has to build on the security. So it's not, again, that Microsoft is inherently unsafe. It's just that there's many ways to fine tune the product, and most companies may not have done the proper security measures. And that's where we're seeing that difference. I see a question here regarding the frequency of claims for Coalition being much lower, taking into consideration the possibility that competitors may have a larger portfolio. Jen, I don't know if you want to go through some of that statistic information.
Yeah, I'm happy to answer that. So it's an interesting question. And I think just to paraphrase, it's, are you seeing fewer claims because you have fewer clients? So the way that we look at frequency is actually based on the number of clients that you have. So it's saying of the number of events that are reported to Coalition or to any other insurance entity, how many of your insureds report claims in a given year? And so when you go back to that market data that we get from the National Association of Insurance Commissioners, what that data says is that for most insurance companies in 2019, 6 out of every 100 insureds of theirs would report a claim. So 6% of their policyholders would report a claim. Whereas for us, that same number was 1.5. So 1.5 out of our every 100 customers would report a claim. So it does take into account, the number of policyholders that we have versus others. But I think one of the things that's kind of interesting, and we didn't actually include this data in the presentation, but I can kind of speak to it. We actually have the same number of events reported to us that other insurance companies have. So something like 5 or 6 of our policyholders out of every 100 report a cyber incident to us every year. But what's different about us, and this is actually something that we talked about in the August webinar where we talked about our pre-breach or pre-claim services, is that a lot of times you can actually solve and handle those incidents before they become a claim. So at another insurance company, calling in and reporting some suspicious activity in an email might result in a full-blown claim with forensics and IR and all of those things. But for us, because we have those teams in-house and we're able to do some quick remediation, we're able to see if any data was exfiltrated, and we have the team that can actually help fix those security protocols, those claims or those incidents that are reported to us don't turn into claims. So we see the same number of incidents, but fewer of them become claims because of the fact that we have all of this in-house capability from security, incident response, and claims. So hopefully that answers the question here.
Thank you, Jen. So as I've been teasing throughout this whole webinar, let's look at some recommendations to solving cyber risk, right? Obviously, the first one is that we do it together. We have open communication with the insured, with your clients, with you as the broker. But let's talk about some things that you can turn around and talk to your clients about. So these are very simple and free recommendations. We're not asking anyone to break the bank because I know there's doom and gloom out there, right? These claims they're not great to see, and we see a shift that has occurred since 2018. And we want to better prepare your clients, our insureds, to be armed against the attacker. Again, the level of security that's required, right, to be completely fail-safe so that nobody can break through, not possible. But to make it so that a hacker it's become more difficult, they're going to pass your client. They're going to say, you know what, this has been harder than it looks. I'm not going to take it on. And there's ways to do that. The ways, we have 5 simple, basic approaches, and they lessen the likelihood of becoming that target. The first are 4 security measures. Again, simple security measures. Turning on multi-factor authentication. This is also known as 2FA, right? Turn this on for all business critical services. This includes email. And as you've seen, if 60% of these claims are starting through email and quick culture, it's a great way to start and prevent a bad actor from getting in. So let's just start with some simple things of 2FA, turn it on. Then implement email security measures to support 2FA, SPF, DMARC, and of course, absolutely anti-phishing. And as I addressed, email, again, being the first point of entry, just making it harder, they will pass the insured and go to the next victim. I spoke and I hinted to backups. Routine backups, testing them quarterly, knowing where you keep them, knowing what you have, right? Pretty simple. And these are considered off-site. And we put that here kind of in quotes. This does not mean physically off premises. We mean is not connected to your main business, right? Not to the main business network. Because if they are, they too will be encrypted. We've seen this 1,000 times. I see this, there's some actual attorneys that we work with that are on the line right now. They've seen it. So keeping them off the network, separate, that'll save heartache in the end. And finally, password management, kind of simple, easy step. Ensure your employees are using distinct passwords. Use LastPass or 1Password so they can store them, because we know and we identify that it's difficult, right? Keeping them, knowing where they all are, knowing what they are. But that way they can be strong and unique and accessible to each employee, right? Each one of your clients' employees. Now, finally, let's focus on, so we did 4 security ones. Let's talk about just a simple human measure for wire transfers. This is all human factor strategy, okay? For any new or change in fund request. that and ensure it that your clients get, have that person that receives the request call the last known phone number for the person requesting, not the one in the email, not the one that says, or just emailing back and saying, hey, sure, can you verify this is accurate? Because all you're doing is you're emailing back with a bad actor possibly. Call and verify. It's a simple, simple step that will stop funds transfer from occurring. So I hope these 5 recommendations will give something that you can feed to your clients, right? Because once you've hit them with, hey, can you afford $1 million loss? You can also educate them a little bit on a few steps they can take. We all know 2020 hasn't been easy, right? So if you can use 5 steps that are free to make it a little bit easier and to avoid future heartache and stay ahead, let's all try to do that and do that together. So I thank you all for attending, and I thank Jen McPhillips for her tireless effort. She assists in organizing all of this and working with the information. If there's any questions, we'll open this up for more questions.
Thank you, Catherine. So we just got a question about, why do we think that COVID has had such a material impact? A lot of the data that we showed throughout is definitely pointing to the fact that there's been an increase in frequency of claims, severity of ransom demands, et cetera. So why is it that we think it's had such a big impact over the first half of 2020?
That's a great question. We have a prior webinar recording. If anybody wants to listen to it, reach out. You can access it. And we actually go through and dive really deep into COVID. But I'm going to give you kind of a light overview as to why. When I started talking about this, I was talking about the 70%, right? We have to move 70% of our workforce to off-site locations. We were testing brick and mortar systems, right? We had brick and mortar systems that had been long in place. And all of a sudden we had to throw up things like remote desktop protocol and other remote ways of accessing the system. That basically companies opened up doors and windows. They basically were like, okay, bad actor, I know that you can see that I'm using a remote desktop protocol. It pings to the internet. And so that hacker is saying, hey, if I can get in, then I have the keys to the kingdom and I can demand ransom. I can trick them for funds transfer. We just have made it easier for bad actors.
Yeah, and I
can even go, I was going to say I can go further because we can also then talk about the human nature of when something happens, usually somebody would ask someone and say, hey, Susan, I know you're in IT, can you help me real quick over here? And then they would walk over and say, ooh, yeah, let's run a scan on this. That's not happening because people are remote and they're like, I don't want to bother someone about this. So they just keep moving and keep working.
One other thing too, and I mean, we've even navigated this as a company, as Coalition. We've had lots of employees start fully remotely. So they're going through training, they're meeting their new colleagues, everything remote. And I think that human element is so critical because even just knowing who the right person is to ask a question, if you have a question about security, is that much harder when you don't have the same onboarding process, the same personal relationship, et cetera. Another question came in, Catherine, I'd love for your perspective on this, which is when we talked about ransomware, there's clearly been this trend towards more and more malicious strains of ransomware. Ransom demands are going up. Actors are getting more sophisticated in terms of how much they demand. What do we think is sort of the future direction of ransomware and how insurance is going to respond as those demands continue to go up and up?
I don't think it's so much as how insurance is going to respond. I think actually that companies are going to respond by getting insurance because they're going to start to realize that they can't afford these kind of losses. And when you start seeing that it's not just big companies that are getting hit with ransomware, that these smaller companies are being hit, that's what's going to happen. I also think that it's going to continue, that we're going to see a lot more of this exfiltration of data. And when the bad actor is in the system longer, they're going to find exactly that information that is your client's Achilles heel so that they can hold that and secure that ransom will be paid. It's their way of basically trying to prevent the use of backups.
Another question came in about our access in the admitted market, which is kind of a different direction, but happy to respond to this. So we did a webinar last month where we announced the fact that we were launching our admitted product in Florida, which is particularly notable because the Florida Department of Insurance is just known for having very stringent actuarial standards, very high actuarial standards when it comes to rating model. And we're one of only a handful of insurers that has an admitted offering in the state. We're actually admitted in 43 states plus DC. Happy to send out the list of all of the places where our admitted product is available, but we have our admitted product available in almost the entire country. Another question that came in about ransomware that Catherine would love for you to respond to is, what happens if a client pays the ransom but then decides to file a claim with their carrier? Will a carrier defend the client in that situation, even if the client has already paid the ransom?
So across the board, the way that all policies work is that you need to seek permission to pay that ransom. So if the insured reaches out and says, hey, we want to go ahead and pay this, at least we have notice to say, okay, yes, move ahead. Outside of that, within our policy, if an insured is using panel counsel or a panel vendor, they are allowed to move forward with the breach response aspect of it, right? That there's been a breach, do the forensics, do the legal work arising from that. And that is something that the carriers would reimburse when you use a panel member from both vendor or counsel.
Another question came in about previous webinars, and we mentioned the Florida webinar. We also mentioned the pre-breach services. So for all brokers who are appointed with Coalition, you're actually able to see all of the prior recordings on your broker dashboard. So when you log in, that's just platform.coalitioninc.com, log in, and there's a tab that says resources. And there's tons of great content in there, lots of marketing collateral, marketing documents. We have policy comparisons. So if you or your client wants to understand how Coalition's policy compares on a line-by-line basis, that makes it really easy to kind of see what that comparison is. And on that, there's also all of the prior webinar recordings. So that's a great resource for you to check out if you haven't seen it yet. Another question that came in about incidents before they become claims. So the question is, we talked about the fact that we'll get incidents that are reported to us that we're able to handle with our kind of pre-breach services and our security team. What does that mean in terms of the time and the money that the Coalition team spends to mitigate that event? And why doesn't that count as a claim? And Catherine, would love if you could respond to that question.
Of course. So there's two ways that it can work within our policy. One way is that we have on the deck page, you'll see the policy where we offer pre-breach services, and there's a sum that an insured is allowed to use that is outside of Coalition services. That's the sum they can use to investigate something that they think is a pre-breach. However, if they use the in-house services, our Coalition incident response, if Coalition goes through and is able to shut things down or find that it's not an event, those are costs that Coalition incurs and does not carry those to the insured.
Thank you. Another question that came in about ransomware payments and the number of cases where we actually pay the ransom versus cases where we don't. And what happens in the event where we don't pay the ransom. I can maybe respond to the first part of that, and then Catherine would love if you could kind of talk about the exfiltration piece that's addressed in the second half of this question. So we've looked at this in the past of, how often are we paying the ransomware versus, how often are we paying the ransom versus using backups from the insured. And, the reality is that most companies, unfortunately, don't keep very good backups. They're either outdated or they'll be corrupted because they're not, as Catherine mentioned previously, in an offsite location. So if more companies had really solid backups that they could immediately kind of plug back into, it would be a lot easier to restore from backups. But because most don't have very up-to-date versions of their data, they do end up paying the ransom. So I think that the last number that I had seen was something like 85% of the time we are paying the ransom. And then Catherine, maybe you can address, what actually happens when the bad actor sells the data or exposes the data that they've exfiltrated.
It's an excellent question, but I want to take it back just a little bit, like one step, okay? In working with counsel, the insured will often ask, well, hey, should I be buying back my information? A lot of times when you think about it, if you have the obligation to report, that obligation doesn't go away just because you, quote unquote, purchased the information back. All you're doing is basically purchasing the silence, okay? That information, you still have to, your client still has to notify. So many times clients will say, you know what, no, let's not pay because I am not going to go and, pay a criminal for this. I have to notify anyway, we're gonna stick with that. However, as I talked about before with HIPAA and OCR, there can be some kind of a pressure with, physicians, hospitals, et cetera, where they're saying, hey, look, if we can limit the exposure by making it so that Maze doesn't expose it, right, then let's go that route. And that's still something that falls under cyber extortion and is still paid for, whether or not they expose it. What I want it to be clear is that it's not that they're like literally going out and selling it right away. This is a business. They are so organized. They've made a lot of money off of this, and they have their own websites now. So Maze has a website where you can start to see where information is posted, and then everybody can start to see that it's out there, and it's kind of a free-for-all. And on top of it, what they can monetize, they will. So if they have special information about your client's company, about backdoors they put in, they will revisit. They'll sell it and revisit. So that is why it's ever so important that your client reaches out to Coalition and we handle it the proper way with counsel, with breach coach, with forensics, so that we can shut all those doors and windows and make sure that in the future, they are not going to be attacked again.
Great. Well, I think that's a good point to end it because we're right up against time. I just want to thank everybody so much for joining us today and for the thoughtful questions. I mean, this is something that, we care a lot about at Coalition. I think that everyone would agree that at the end of the day, we are in the business of protecting our clients and helping manage and prevent claims. And so the work that we did on this report was really interesting and eye-opening just to see how concentrated some of those points of attack are and just how easy it is, as Catherine mentioned previously, to put in place some measures to try to prevent those events from happening. So we really appreciate you taking the time to listen and to learn, and hope that you take some of this information back, not only to your clients, but also to your organizations, because all of the recommendations that we shared today are just as applicable for all the organizations that you work for as well, in addition to the clients that you serve. So thank you again. I have on the screen just a couple of different ways that you guys can get in touch with us if you have any questions, whether it's coverage policy related or in the event of a claim that either your organization or your policyholders are experiencing. And thank you so much. Hope you have a great rest of your day.